Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Craig Salm, Chief Legal Officer at Grayscale, to discuss the D.C. Circuit Court ruling in favor of Grayscale is a step forward for those advocating for Bitcoin exposure through the ETF wrapper. Craig, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill. It's great to be here, and thank you for having me.
You got it. And this is a significant decision for Grayscale. Give us a high-level overview of what this saga has been like and what this ruling means for not even just Grayscale, but for the industry overall.
Yeah, so yesterday's ruling by unanimous decision in favor of Grayscale was a major win for Grayscale, our shareholders, and really the broader Bitcoin community. But just taking a step back for 1 second, what this was the culmination of, this really started back in 2013 when we first launched GBTC, ultimately with the desire for it to become an exchange-traded fund when permitted by the regulatory environment. Fast forwarding to October of 2021, when the SEC allowed the first Bitcoin futures ETF to start trading, that was the same day that we refiled our application to convert GBTC into an ETF. The reason why we did that is because we took the view that if the SEC is okay with Bitcoin futures, which are derivatives of Bitcoin itself, well, they must also be okay with physical or spot Bitcoin, like what GBTC holds. Following that, we had a record-breaking 11.5 thousand comment letters into the SEC, all expressing their view that the SEC should approve this application. That represented academics, market participants, institutions, and think tanks, and members of Congress. Fast forwarding to the following June, unfortunately, we were denied by the SEC. And on that very same day, again, we filed this lawsuit with that key argument of if you're okay with futures, you should also be okay with spot. Fast forwarding, we had briefings, oral arguments, all leading up to yesterday's decision where the court did rule in our favor, really leaning into that argument that we made all along around futures and spot being inextricably linked. So this is a big day. It brings us one step forward and one step closer for GBTC to become an ETF.
Yeah, I mean, Craig, it does seem kind of curious that the derivatives were listed before the actual spot Bitcoin, and the correlation is like, what, 99.9?
That's exactly right. We provided studies to the court. There's one study done by Professor Bob Whaley of Vanderbilt, who actually invented the VIX index. He did a years-long analysis of the futures and spot market and concluded they were 99.9% correlated, which is to say, for all intents and purposes, in the Bitcoin ETF context, they are the same. And therefore, if you're approving Bitcoin futures to trade, you should really be approving spot. So that was a really important study that the court actually did cite in their opinion yesterday.
So to be clear, it doesn't mean that the actual ETF product has been approved yet. There's a number of other applicants out there as well. So what do you think happens as we look out to the next 45 days?
Yeah, that's exactly right. So there is this 45-day period under the federal rules of appellate procedure where the SEC has the opportunity to seek a rehearing of the decision. That's a process that we just have to let play out and respect. And so we are otherwise focused on re-engaging with the SEC constructively to allow this conversion to happen. But that's true that it is not happening today, but it definitely brings us one step closer.
I mean, it might be a little bit challenging for the SEC to appeal this anyway, if you read between the lines of what the ruling suggested.
I can't speculate on what they will be doing. I will say that in the decision, it is very clear that the reasoning the commission is focused on for denying spot Bitcoin ETFs in the past, specifically the potential for fraud or manipulation in the underlying spot Bitcoin market to impact the ETF, is really not a valid argument anymore. I can't think of other reasons why we should not be allowing Bitcoin ETFs to exist in the US. Bringing Bitcoin further into the regulatory perimeter will really be great for investor protection and capital formation, which are two of the SEC's key missions, because it would just open up access in a regulated wrapper to Bitcoin.
Do you think if one product gets approved that all of them would be approved at the same time, or they'll roll that out?
I'm really focused on GBTC. I think the stakes are quite significant and different for us compared to other filers. We have an actual fund today with billions of dollars of AUM. It trades tens to hundreds of millions of dollars in daily volume. It represents nearly 1 million investors across all 50 states. However, because it's not an ETF today, the product is not tracking the value of its underlying Bitcoin like it would as an ETF. So I think the consideration for us is just a little bit different.
All right, Craig, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.